Hey guys, thank you for watching this video. Don't forget to hit that thumbs up and subscribe. I'm putting out at least one video a week, giving you guys absolutely free content that's gonna help you guys, whether it's long-term, short-term, just in finance and everything like that. So with that being said, let's jump back to the video. What is going on, everyone? Welcome back to another video. I know it has actually been a little while here. I'm trying to let the microphone not kill it over here, so I'm going to back up just a little bit. But a lot's been going on in the market, and I haven't made a video in a few weeks, and I just kind of want to go over why. For a lot of things, and this needs to go away here. The one thing is we want to go over QYLD, and is this going to be a buy? So, but I want to explain a couple of things and really why I'm going to start buying again. Now, the one main thing I want to make sure that everybody's aware of is I'm not going to buy I'm not going to take all the money that I sold out of and buy right back in. I think that's something very, very important that people need to know before we jump into this. So I am going to start buying, probably about a couple $1,000s every single week until I get back in there. And again, I like cash flow. I am a huge fan of cash flow. I understand that everybody else is more on assets and stuff like that over long term, your net worth. I'm okay with my net worth sinking a little bit during this time frame as long as I got plenty of cash flow. So QYLD, like normally you guys know, this is like the king of cash flow and monthly dividends. Especially if you want to keep your money liquid, you can find these monthly dividends and you're going to get that cash flow every single month. Just like if you got a mortgage on a house and you rented it out and you were able to collect some money for rent. Except for this one is that it moves the market, and you may not have tenants tear everything up. So with that being said, the one thing I want to go over here, and we're going to go to bar chart here rather than seeking alpha, guys. This one mainly just because we're looking at the overall chart, and this is something that I think more people need to look at. And if you guys look at it, you're going to find something here that seems to be a common thing here. Now let me see if it'll actually let me. So right around in here, you're going to see that it's darker right here where I just put this ray. That seems that 1787 is where it's currently trading at. Right around this area is QYLD always seems to bounce. And again, guys, this isn't one that's holding something or all these stocks that are like, oh my god, amazing. This is again based off of cash flow. They are holding good companies in their portfolio for the most part. Again, if you want to see their holdings, seeking alpha, and then all you got to do is go to their holdings here and you'll be able to see everything that they are holding, from Apple, Microsoft, all these tech. They are a lot in tech companies. Again, this is based off of the NASDAQ. NASDAQ has a lot of tech. So again, holding good companies. And again, you're allowing yourself to make money off of covered calls. Again, if you guys don't know what covered calls is, for every 100 shares, you can take one option and you can sell it. And QYLD basically does a monthly option. They sell it, and that's how you get your dividend per share. Because again, you're not going to be able to do a lot with 20 bucks. But the share is only $17.87. So it allows you the opportunity right now to get in. And again, you guys know I've seen it where I bought when it was up in here, guys, in the 20s still. And I'm okay with that because, again, the cash flow and over time, it'll be good. You guys know that I did sell quite a bit of it there, and I took a little bit of a loss on QYLD. And I'm not ashamed of that. That does happen, guys. You guys got to be aware of that. But again, I was getting all the cash flow through here. And again, that's how I was paying my mortgage and stuff, guys. It was very, very easy. Or correction, I may not have used that money exactly, but that's money that, no matter what, I knew I was going to be able to pay my mortgage on. So there is that. Now, the reason why I'm going to start buying back in is because, well, I need to. Now, I do like holding on to cash, and I'm going to hold on to a bunch of cash still. But if you are an average person making, say the average in America is $1,000 a week, and you bring home $800 or $900, depending on where you live in your tax bracket and everything else, taking $100 like what the average person does every single week and buying, maybe splitting it up 25, 25, 25 and buying, $25 worth of QYLD, $25 worth of DIVO, and then $25 worth of SPY and Things like that to allow yourself to continue to moving. Like me, I recently bought 100 shares of DraftKings. I am currently down, but I also sold a covered call on it to where I'm actually flat on it, which is actually okay with me, and I'm fine with that loss because I'm not actually losing yet because I'm still selling covered calls on those and making money. And again, we can go over a whole strategy, but again, QYLD, I'm buying back in because of the chart. Again, you can do this same thing over here. If you just go to summary and you're looking at the max overall, and again, if you go to year to date, you're down 20%. And I'm okay with that. See, you can see it down here, 1827. We're a little bit below that. We're a little bit below 18. This one could end up dropping to around that 16. Let's look back here. I believe it has been, it's gotten close to below 17, but it's never actually gotten below 17. So again, that's kind of where I find, oh, okay, it's a solid basis point. It's held up in here multiple times. Now you're going to be like, this is support and resistance. Kind of. I just see where it's at, and I think now you're at a better value than what you've ever been at before. Now, one thing you got to remember is you're not getting $20 per share here every single time like you were before. Now you're getting $17 or 17 cents and 16 cents. Which is okay, guys. You guys gotta remember that. The average is about 17 to 18. Actually, I think the average on this, if you took them all, would probably be right around 19 to 20 cents. Now, I'm okay with getting 17 cents right now because I bought it for so much cheaper. And if I hold it through everything, I'm gonna end up going back and getting 20 cents per share and 22 cents per share. And you know, back in December, if you were holding this like I was, got 50 cents a share, which it was an absolute killer. It's like 2 months worth of dividends as just an extra dividend that you got, and it was great. And I was able to do a lot more with that. And again, I reinvested it all, and then we sold it. We did sell it at the beginning of this year, but that's okay. I do like this stock. I do think, again, if you're looking for cash flow, it's not bad. But with that being said, guys, do your own due diligence, know what you're looking at. Again, know what QYLD holds. Don't just go and buy something because somebody tells you to buy something. Go look at it. Again, holdings, guys. This is the simplest thing on seekingalpha.com is what I'm using here. It'll show you technology, what sectors do you want to be in, communication, healthcare, consumer advocates. Again, it shows you the top 10 right here, and it will show you all of them if you really want to. Do your research before you ever buy into something. Know what your cash flow is. Know what your risk is. Don't risk something that you can't afford. That being said, guys, thank you guys all for watching this video, and I look forward to uploading quite a few more here in the coming days.